The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes here. Tom is out buying real estate this morning. You got to love it. He's Gold Long America. And, folks, if you haven't had a chance to check out the white paper that Tom did, the bull market in Florida housing, go to the homepage at TFNN.com. You'll see under breaking news the second link there. As also, if you qualify as a qualified investor, how about that, qualify twice? Over on the right-hand side, you'll also see the Tiger Real Estate Opportunity Fund. You can click on that. You can also get in touch with Kathleen at TFNN.com. And it's information you certainly want to take a look at. You want to certainly consider it. You know, real estate certainly off the bottom, all the news out there, and it's not, you can't act soon enough. Also, what you'll see here on the homepage of TFNN.com, there's a survey they were doing. It's not going to be up there for a real long period of time, and we just simply want to be able to make sure that we are providing all of the great content for you, and the best way to do that is to understand you, and if you would, it's about maybe a 10-minute survey or so, 10 to 15 minutes at max, and for taking that survey and being honest with us, we certainly want to go ahead and give you a gift. That'd be 25 Tiger dollars. So, number one, if you are a subscriber to any of our services out there or have subscribed, you certainly want to go out there, you can use those $25 in our Tiger store and use towards all your subscription services and so forth. And if you're just a new listener, just go over to the homepage of TFNN.com. What a great way to start your what do we want to say? Just start your. I'm without a word out here. It doesn't really matter. Just simply go to the homepage of TFNN.com, and we'd love to hear what our new listeners think about TFNN and what it is that we can provide you as far as services. Let's go take a look at these markets out here. We had the U of M sentiment survey come out down just a little bit here this morning. I guess revised lower to 82.7. So we've got another attempt here. Here's going to be a great session here to be able to take a look at whether or not the bulls will go ahead and consume this information. No. We take a look at Friday's action out here, and let's go take a look at the specific. Let's go take a look at the indexes. We've got the S&P 500 on our screen. The S&P 500 had what's called a key reversal day. That day was on Friday. Now, key reversal from the standpoint of this, we had the S&P 500 moving down, as you know. And when you take a look at the session from November the 15th out there, on Friday, you had the market, you had the price of the S&P get above the high of Thursday, below the low of Thursday, and the close was in the opposite direction, meaning it was a higher close than where the market had moved down to. That is a key reversal day, and those are days where you want to be paying attention. You have to have a trend in order for it to be a key reversal day. It's not going to happen in the middle of a move. You've got to be extended. You've got to have a trend that is certainly in place out there. That is certainly what we had going on inside the markets. And what it also did in the S&P 500 created a bullish engulfing candle out there. So that gave you all the signals. Believe it or not, if you're trying to, here's the thing. People will say, I want to buy low and sell high. But as the market is moving down, you've got all that fear out there. So we understand that fear. That's why I want you to understand candlesticks. I want you to understand what the bulls and bears are signaling to you, because that's going to give you a better opportunity to be able to get into a market. If you want to truly be able to buy low, you've got to buy it while things are on sale. While nobody really wants it, that's when you want to be picking those things up. You got to sell when you can sell into strength. So you're buying in weakness, and you're selling into strength out there. And patterns, you've had a 1 to 1.272 A to B equals CD on the S&P that had completed. You were coming into, a set of swing points or an area here of resistance or support, I should say, in this case here on the S&P 500. That really is an area that took you back to this little choppy period that went back into the middle June time frame all the way until the middle of July. And you had a key reversal date, you had a bullish signal, and certainly what we saw here on Monday was the market just simply zoom to the upside. Where is the market going? Number one, the very first place that the market will move to, it'll go and test the trend line that it broke. So you can see that trend line. You can draw this in on your charts at home. Just simply go to the low of October 4th out there, an important low, that low in the S&P, 1074.77. Then here's your next touch point. Use that June 4th low out there. That would be the 66.74. So the trend line, that is the first place where it is going to run to. I suspect what the S&P will do is get back inside that trend and make it all the way back up to the swing point high on November the 6th out there. That would be in the 1433 range. Right now, we just have to take this one day at a time. This was a very, very powerful reversal candle pattern that was out here. The 4-day candle pattern of of Wednesday, Thursday, Friday, and Monday out there. That is a very, very bullish sign. The importance of that, really two things. Number one, if those lows get taken out, that's going to give you, especially if they get taken out anytime in the near future here, that's going to really give you another signal as to how weak the actual market is. However, when we say weak, how weak the market is, if you go take a look at the New York Stock Exchange, the larger breadth of the market, as you know, if you listen in on this show here, that has not shown really any weakness out there whatsoever when we take a look at retracement levels. And we'll certainly go look at that here in a few moments. Now, what we had yesterday, what occurred yesterday, I'm going to simply go over to the ES Mini. We'll take a look at the 30-minute chart out here. In the last less than 24 hours, quite frankly, because I'm talking about yesterday at about 2 o'clock. So in less than 24 hours, we've had 3 pieces of bad news come into the market. The very first one was Uncle Ben said, hey, I don't really have a whole lot more bullets if we go over the fiscal cliff. So you guys out there, meaning our politicians that somehow we employ out there, go get your act together, because Uncle Ben says he doesn't have much more in the way of bullets out there. Well, that led to the sell-off here. If you're taking a look at if you're watching us on Tiger TV, that was a sell-off we saw between 1 and 1:30 yesterday. That's that long-ranging bar on the way down. The bulls stepped in. They consumed that information. So the key reversal day, that's a change in psychology. It is such a shift in psychology. And so if you're looking to be able to, either buy weakness or sell into strength, you're looking for key reversal dates. There was a key reversal day out here in the S&P 500 to the upside. That key reversal day was right here. That is this day right here. You can spot them. And so you had a trend coming in off of the June 4th lows. You had an extended condition. You can say extended, just simply take a look at the overbought condition. If you just simply use the relative strength indicator as one of your indications of being overbought, it happens to be the day here of August the 21st. August the 21st was also a key reversal day in the S&P 500. The market did move lower, but just slightly. Didn't really, but it was a key reversal day. As soon as that was taken out, folks, that told you that there was a continuation pattern. Now, it certainly got taken out with a conviction on September the 6th out there. Take a look at that wide-ranging bar. So if you are not going to buy extended patterns out there, if you're not going to buy, try to buy lows, if you're not going to try to sell highs, and you're going to try to play the market going long or short, what you've got to then do is you've got to switch your psychology to identifying continuation patterns. And so in this case here, just simply understanding that this was a key reversal day, and once you got above that, that was giving you information that the market wanted to move higher. You didn't know where. I mean, the only way that you could identify where would be to start going back to the left-hand side of the chart and then take a look at where maybe the last set of swing points is at. So there was so what I'm really saying here, because this is a key reversal, because it's a bullish engulfing, let's use when the lows of November the 16th get taken out, or if the lows of November the 16th get taken out, and you're not in the market, that would be a place where you would go ahead and you could take, or you wanted to add to a position, that would be a place where you'd want to do it. Because you would have just taken out, and it would be telling you that the market wanted lower price. Now, what we know about the S&P 500 is if and when that area gets taken out from November 16th, that we know we have really 2 targets down below. The first one is going to be the June 4th level. So that would be an area of about 1266. And the close on Friday, or the low on Friday, I should say, was 1343. So that's a pretty good chunk of change out there. We also know that there is volume at the lows on October 4th that have not been tested. That is in the 1074 range. So you really want to be able to understand these candle patterns out there. If you'd like more information on that, if you go to the homepage of TFNN.com, you click on my name, it'll take you to, there's 2 workshops that I did. I think they're absolute musts for anyone, whether you're new or you're an experienced trader. If you haven't used candle patterns or you'd like to learn how to buy and sell the D point. Buying and selling the D point, folks, that's where you let the market do 75% of the work for you. And that makes it easier for you to try to buy low and sell high. And so I teach you what to look for there, and it's worth its weight in gold. The number of hours of education and training that went into it's about a 6-hour period of time. It's on your members page for, at least 30 days. Includes a month of my newsletter service, and then about 20 some odd hours of other educational materials that I have that are included with my newsletter subscription service out there. You know, it's a great place. It's a wonderful place to start. You know, if you want to compress decades into days, that's really where you do it. And I teach you how to either trade continuation patterns or how to buy those stretched areas out there. So that's what we expect here. So now I want to go back now to the ES Mini, because you've had 3 pieces of news out there in less than 24-hour period of time, where you've got the bulls here that are consuming that. The bulls have started Thanksgiving early. They started yesterday, and the meal came on the table for the bulls, came on at 2 o'clock, really about 1:30 in the afternoon. When they consumed the information, they said, hey, Uncle Ben, we knew that you didn't have any more bullets left. There's nothing new there, and the bulls continued their march higher. Then what did we have? We got the news out of Europe that the finance ministers and the IMF can't come to terms on what the debt deal should be in Greece. What did the market do? The market moved down for an hour and change, sold off from the 11 o'clock time frame. It was at a high of about 1387 all the way down to the low. Only made a 0.786 retracement coming into 1130. And then the bulls, wherever they were at, they were around the world. This is a one-world market. The bulls stepped in and consumed that news. Now we got our latest piece of, let's say, bad news out here. So you got to give the bulls, looks like they're giving about a half an hour, maybe to an hour or so before they step in. And that was the U of M sentiment indicator out there. So if the bulls do step in and they chew on that, they consume that too, that, folks, is absolutely a total change in psychology, because what would have happened during the time period of when the market started selling off, anywhere between, let's say, the October 17th time frame all the way down to, we'll say it was the November 14th. Any bad news there? What happened to bad news? Bad news was sending the markets lower. What happened to good news? The good news was getting consumed and the market was moving down. So this is what you want to be paying attention to. And right now we've got the Dow's up 18 points, the S&P is flat, the composite's up 21 cents, the small caps are down a penny out there. King dollar, we'll go take a look at the currency market, because we've got a lot of moves here in the currency market. We'll go take a look at the Japanese yen, the euro. We'll take a look at the euro-yen relationship to the S&P 500 as well. It is Thanksgiving, folks. I hope you're having a fantastic Thanksgiving holiday. Be safe out there. Eat lots of turkey, lots of stuffing. It's the one time of the year where you can certainly overeat. It's not really good, but you can do it anyway.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. Steve Rhodes here, and the Dow up 24 points right now. S&P pretty flat out there. Let's go take a look at the Euro-Japanese Yen currency pair. Now, the Euro-Japanese Yen currency pair, this is something that you really want to understand. And the reason is because it has a really fantastic, really extraordinary, really outstanding, really great correlation to the moves in the S&P 500. Why, I can't tell you. But what I can tell you is that it does, and what I can tell you that you want to do is you want to understand when you start to identify divergences out there. Divergence is always a great way to be able to look for things that are just simply out of sync, because they're going to also give you some leading indications as to which way a market may be moving. Now, the currency market, much stronger than the stock market by far. Now, the Euro-Japanese Yen, I've got a couple of areas here that I've identified for you on the chart. So if you're watching this on Tiger TV, maybe you're listening on the radio or you're listening on your mobile device, thank you so much for doing that. If you just simply go to Channel 10, so if you're listening now, even if you're catching a taped version of this show here, our shows are archived on Tiger TV on the homepage at TFNN.com. So go to Channel 10, and what you'll take a look at in the upper quadrant, the upper portion of my screen is the S&P 500. And those are the candles that you're looking at, the red and green candles. On the bottom, you're going to see a line chart. And that line chart is the Euro-Japanese Yen currency pair. Now, what I do here is, and you can take a look at it, you can see how it really correlates well from a directional standpoint. It's from a directional standpoint only. There's not a tick-for-tick dollar type of coordination out here. What you're looking for is you're looking for divergence. So here's a divergence period of time where we saw the S&P moving higher. We're going back to the March 19, 2012 time frame to the April 2nd. Now, it's subtle. Many times you've got to take a look at these little subtle things out there, because it's always the little things in life. It's those little subtle things that make all the difference in the world. That's why this Thanksgiving, I want to make sure that, what you're doing is you're identifying something really great quality within each of the people that you come in contact with, and I want you to just simply express to them individually, what it is that one of their great qualities, because you'll be amazed at what it will actually do for them and just simply for your relationship. So little subtle things. Well, the S&P was moving higher, yet the Euro-Japanese yen currency pair was basically flat. That's this red horizontal line going across my screen. That was giving you an indication here that the market was getting ready to turn. That's, in fact, what we did see. It turned for a bit. Where did it move down to on the S&P 500? Came back into the set of swing points from March the 7th, 2012 out there. Did what it was supposed to do. There was another one that took place shortly after that. We saw the S&P 500 moving up off of the April 23rd level, moving higher, yet what we actually saw was kind of a little bit of a decline in the currency pair between the Euro-Japanese yen, if you take a look at that on your chart. So you can put these on your chart patterns. Currency charts are easy to get. Almost all charting packages will pull that in for free. Maybe I don't know if all will or almost all will or they won't, but you certainly want to be paying attention to this currency pair, and you want to be able to correlate the two. One of the other things, and you heard me talking about it if you were listening in last week, as the market was moving down, I said, folks, there's a correlation problem out here. And that correlation problem, as we take a look at the lows from November 13th, when the S&P continued its move lower from the 13th down into Friday, the 16th. So if you're looking at on my chart here, actually, I'll go ahead and draw just watch the cursor. You'll see this little black cursor line out here on my screen. What you saw here was we saw the Euro-Japanese yen really move to the upside. I mean, it moved to the upside. This here wasn't even subtle. This was like a foghorn coming out at you and blowing right in your ears here. And so we had this divergence that was going on. We had a key reversal day that took place not just in the S&P, but indexes all over the place, as well as all types of candle signals. And then you just go ahead and you put this divergence here with the Euro-Japanese yen currency pair. So that is something that you can keep in your tool bag, that you're not going to find that anywhere out there. There's also another great correlation, and that is the GE chart out here. And you want to take a look at the GE chart and the Dow, because this is a great leading indicator for major reversals in the marketplace, or we'll just simply call them reversals in the marketplace. And on the bottom here, I've got the Dow Jones index, and that's the red line. And in the upper portion, the upper quadrant, is GE. And GE is like number 27 or 28 out of the Dow 30 stocks, maybe 1.2% or so on the total weighting inside the index. So GE is not going to move the Dow. But what it will do as a leading indicator, when GE is moving down and the Dow is just moving sideways or moving up, it's giving you a real good leading indication that you're going to see a correction in the marketplace. Right now, we don't have a divergence between the Dow and GE out there. 877-927-6648. Speaking of the Dow, it's up 24 points. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Zales taking it in the shorts out here. Not a diamond in the rough. Having a rough day out here. Down 27% off, $2 and change. Now, what I have up on my screen here is the weekly chart of Zales. This thing has been consolidating, folks, ever since the time period of January 30th, 2009. The lows of the consolidation range in the dollar or so range, but maybe the low here looks like came in around March 6th, right around 89 cents. Now, the high of the consolidation range takes you up into the September 18th, the week of September 18th or so, in the $6 and change level. That's that black horizontal line going across my screen out here. Now below this up on the chart, you can see really having a tough week, having a tough week of it, and certainly a tough day, gap down on the daily chart. But if you take a look at these candles, it had a nice candle here on August the 31st. The week of August 31st moves up, has some nice volume behind it, 7.5 million shares. But as it gets up into you wanted to see this candle up at the top, not down here in the center like a meaty, juicy hamburger or something like that. You really wanted to see it trying to bust out to the upside with one of these candles here and with this kind of volume. Instead, what happened, and if you had gone back and you had laid this out on your chart, it was giving you all kinds of signals that it was losing energy, both from a volume standpoint. Volume was decreasing, and you had these small little bodies up here. You wanted to see the wide body as it was trying to bust through an area of resistance. So you can see here that the bears were in control from a weekly standpoint. You really got that identification here last week with that long upper shadow inside that candle. Looks like on a weekly chart may even have been a shooting star, the inverse of a hammer candle out there. If we take a look at the daily chart, you've now got volume coming out of this thing on a low volume day so far, gapping down with 3 million shares. If you take a look at this high volume bar on June 22nd out here, 4 million shares. Looks like Zales wants to head down and go visit all of the friends down on June 22nd. That'll be the $2 and change range. That is for Zales Corp. Let's go take a look at the Japanese yen U.S. dollar currency pair. I showed you this chart here where the yen. So here's exactly what I'm talking about. So the yen U.S. dollar, as it's moving up into an area that's going to, in essence, be a resistance area. Resistance, why? Because it was making a 1.618 expansion of a swing point, a 1.272 expansion of a swing point, a 100% move of a move, a 0.618. Just simply from a Fibonacci standpoint, you had the yen moving up into an area that was going to be some strong resistance. But when it was moving up in there, it was moving up with a long-range bar. That's what you would have wanted to see in Zales or any other chart, quite frankly, as you're coming into an area that's going to be identified as resistance. And there's different ways to identify support and resistance out there. You know that we take a look at retracement and contractions using the Fibonacci summation series out there. Well, we knew that because it was coming in there. We didn't know it, but we suspected, based on other chart patterns that would act like this and based on what it is that you would want, that as you come into this area with a wide-ranging bar, it tells you what? Tells you that you're going to want to break out of an area of resistance and you're going to want to go seek a higher level. The views are always better up at the higher levels, and that's exactly what the yen is doing. Now, in this chart here, the yen is getting weaker against the U.S. dollar. That's why, if we take a look at the U.S. dollar index right now, it is almost unchanged. You know, it looks like it's down a nickel out there. And so there's a correlation between this is putting strength in the U.S. dollar and the euro is putting weakness in the U.S. dollar. The euro is about 57%. The yen is like 13 some odd percent of the U.S. dollar index. Now, this says that the yen wants to move into the 82.71 level. That's the next retracement level. That'd be sweet 618. You can see in the bottom of the chart here, and this is the daily chart we're looking at, you can see how it's getting into also what we'll call some extreme overbought conditions out here. The last time that it was up at these levels was when it made a high on March the 15th out there. So you can see now it could stay in this area here for a bit. And what that means when I say a bit, if you take a look at the yen was in these overbought conditions really from February 16th all the way up into March 15th level, but it was not completing any pattern out here like it is right now. So I suspect what we'll see is the yen may just motor on through this 0.786 level. That's the 82.71, and it will probably do it tomorrow. So while we're there watching football, playing golf, eating turkey, at least that's the festivities in the Rhodes family out there. I don't know what your festivities are. What you can see the Japanese yen do is move all the way up and make a 100% move of a move, maybe get all the way up into the 84 level before it then goes ahead and gives it up. And when I say give it up, all it's going to do is just simply a normal retracement. It's going to pull back. But while it's doing that, that then is going to put some energy into the U.S. dollar index. You'll see the U.S. dollar index get weaker. That's really part of the fueling system. Like if I were NASA, this would be part of the fueling system for the space shuttle, for the countdown to take us into higher price going into the middle of next week. Now, if I go ahead and take this and put this on a longer-term chart, let's put this on the weekly chart out here, and let's go take a look at the overbought, oversold conditions out here. What you'll see on the weekly chart, it's now getting very close to that area as well. That's why I suspect that the yen's either going to stall right around the 0.786 level, or it's going to go ahead and make its run, which I'd like to really see you do it. I'd love to see it make its run tonight, tomorrow. Spend all the time that it can getting up there, and then start to give it up and pull back, because that is the fuel that we need in our market. That is on the Japanese yen. Let's go take a look at the Queen, see what the euro is doing here. You can see the bulls and the euro are in charge of this session. If we take a look at the euro, we're taking a look at the bearish trend channel that it had been traveling in, coming back into the October 18th level. The high there really started out, I would say, really on October the 17th. The high there, 1.31883. I think in my eyes, it's either 833 or 8883. And moving down now, what happened here is you saw the euro punch through this area. This was obviously on Monday as our markets were moving higher, but it broke that trend. When you break a trend, the trend is your friend until it changes, right? In this case here, the euro is changing its trend now. When you break out of a channel line or you break a trend line, what happens is you're going to go back at some point in time where the equity or the symbol, in this case here, the currency pair, you're going to go back and test it. That's what we saw take place yesterday. If you take a look at yesterday's candles, who was in charge here? Most certainly the bulls. If you take a look at this morning's candle, you can see that what happened is the bears, they tried shoving it all the way down. They wanted to get back inside that channel because it had a lot of friends, but the bulls stepped in and said, no way, no way. You now are seeing the euro starting to move higher. That makes the U.S. dollar weaker. That's the little offset that we have going on here between the euro and the yen. The yen wants to move up into the 129 and change. Maybe the 130 level. 130 would get you up into the 0.786 retracement. It would also take you back into the swing point of October 31st out there. That is what is going to go ahead and eventually get the fuel going inside the U.S. markets. If we go take a look at the bond market, let's go take some people are going to go watch the James Bond movie, I'm sure, this weekend, maybe even tomorrow. Showing you again here the equal moves, the harmonics that are inside the marketplaces. The 30-year Treasury we're looking at, the blue boxes show you harmonics, almost exact moves from the lows to the highs. The yellow boxes, a little bit more of a move, but you can see two of those taking place. That plus, again, last week was just simply signaling to you, take a look at these bodies out here. You've got some very narrow range bodies. These doji candles, they had more meaning on the upside. In my work, they have more meaning on the upside than they do on the downside. On the upside, and you start to run into a resistance area that's giving you a whole lot of information out there. Well, we knew just simply by taking a look at these moves, as well as the 30-year Treasury getting into that overbought condition. Now, what we're going to take a look at the trend line that the bonds broke out of. That's just simply coming off of the highs from July 25th. Out there, your next touch point can certainly be the highs from September 5th. And what the bonds are going to do is they're going to try to get inside. They're going to at least come back and test that level. May even test it further, get back inside the trend. That would say, something to think about. If we just simply take a look at retracement from its most recent swing point low on October 25th out to the high of November the 16th, you'll see the 618 level, 148.18. That is where your 30-year Treasury wants to head to. That, too, will go ahead or should put fuel into the U.S. market. Let's go out to Paramus, New Jersey. And, Victor, thanks for calling. Thanks for holding. How are you today?
Yeah, good. Do you see that gap on Intel from June 15th, 2009? Is that going to be filled at 15?
Well, let's see. Let's go take a look at it.
So it's at 19, so it's another 20% on it. Then it's a clean chart.
Yeah, so let's take a look at Intel. So Intel certainly struggling, trading at the bottom of its range here right now.
So you know, Wells Fargo has the same thing right around that area.
Does it? Okay. So we got
15, so that's double, 100% move.
Got it. Yeah. So if we take a look at Intel, trade out at 1930, and it is making a 100% move. Let's go ahead and take a look at. It's got some pretty decent support. It's coming into some pretty decent support. Let's just take a look at the horizontal support. Then we'll go take a look at some volumes out here and take a look at where Intel is moving, because certainly in order for these markets to move higher, it's going to need the semiconductor industry to do that, and Intel is a heavy weighting inside there. So there you can see, folks, this horizontal line has acted as a support level. Right now, it's coming into its most recent swing point down there, which would be September 7th. 46 million shares are down there. The low is 1980. What is the low here? 1916. So it's not down there yet. coming in yesterday with 85 million shares. 85, 65. 85 or 65. Man, my eyes are getting weak here. It looks like 85 million shares yesterday. So it's coming in. It's coming in hot. Now, it's going to probably test it on Friday. Maybe it'll test it today. It'll be on lighter volume, the 1916 level. Are you trying to go long, Intel?
No, I told you it's going to close the gap at 15. That's where you're supposed to be going in 2009. Get past that. You got to deal with March coming up. They're going to have lousy sales, and that's when they're going to bottom out.
Yeah, it also has, it may, it's got some pretty decent support. It tested that gap, tested the high of that gap on July 15th.
Closed in the hole
1772. So it's possible that may be where it runs through. But right now, what it's going to have to do, it's going to have to get through this other area of tested support out there. But, if you're looking for a trade on it, ideally, you would see Intel come all the way down and fill the gap from July of 2009 out at the $17 range.
Check Wells Fargo, too. You got the same thing. It's at 15, and it gapped up in May or June of that year, too. It's probably going to go down and have to.
Well, let's go take a look at the Wells Fargo chart. WFC is the ticker symbol there. So as we take a look at Wells Fargo, what are you looking at there, Victor? We lost Victor. So let's go back, and we'll go back to 2000. Well, Wells Fargo, I don't see it going down to a gap in even in 2011. So I don't see the same chart pattern at all on Wells Fargo that we were looking at on Intel. But if we take a look at Intel here, it is going to be coming up an area of support, coming in a little bit hot from a volume standpoint. It is also coming against the area where it did break out. So here is also the volume there is 174 million shares. So I suspect what we'll see here with Intel, we'll see this do a little bit of a bounce coming into Friday, Monday, Tuesday of next week out there. No bulls. Don't anybody go out here and buy Intel. Now, a little bit different. Let's go take a look at the semiconductor index, the SOX out here. Let's go see what the SOX is telling us. See if there's any signals out there. I think Intel may be is one of the top weightings. So the SOX itself had a real nice hammer candle out here on Friday. So just like Apple did, we're taking a look at the candle from November the 16th out here. In fact, it's the only index that had a hammer candle out there. That is a very strong reversal signal. He had a nice move up and gap up on Monday. You can see right now the bears trying to take control of this. But what it looks like what the SOX will do is at least try to move up to this trend line out here. And here's the deal on the SOX, folks. What you want to be paying attention to most certainly is the low of November 16th, because if you are wrong the semiconductor index and you get a close below 349.79, if you're long, you're wrong out there. You never want to see a close below a hammer candle. That means daily, weekly, monthly. Those are strong areas of bullish signals out there. One of the stronger bullish signals that you can see in the marketplace. Let's go take a look at some of these other stocks here that are moving because the market's really relatively flat out here, not doing a lot. Let's go take a look at St. Jude Medical, STJ. They do a lot of great work out there. Stock this morning here is down about 11%, so it's off $4 and down with volume out here. So not a good thing on St. Jude Medical. Let's pull this back. Yikes. So this equity here has tumbled from its highs, and it's also taken a swing point. This traded in May of 2011 at the $54 area, trading at $31.59 right now, and looks like it is below. It is below its most recent swing point. So it's testing a swing point today, and it's doing it with volume. So it's going to take that area out. That's the December 19th level. That had about 6.6 million shares or so in there. Today, so far in trading, on a light volume day, 7.9 million shares. St. Jude Medical headed for its lows November of 2008 in the $26 range. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Coming into our last segment here, and happy Thanksgiving again to everyone that is out there. Today's lineup, Basil Chapman up next, up in Newton, Massachusetts. Larry Pesavento from 12 to 1. 1 to 2 will be open today. David White doing a 2 to 3 show. 3 to 4 will be open. I'm sure we'll be replaying something during those 2 open hours. Then the Tom O'Brien show from 4 to 6. And right now the Dow is up 21 points. I want to go back to St. Jude's. I put the weekly chart up here on the screen. What we can see here is this area here where it's traveling in ought to hold. Why? It's trying to punch through. First, you've got this horizontal support line that's been tested. This really on the weekly chart goes back into March 6th of 2009. The actual lows of March 6th, 2009 were $31.24. Kind of a sad case here that it's already back at March 2009. What you can take a look at, though, it does have this high volume bar here, swing point in essence from October 9, 2009, 82 million shares. The low there is 32.50. So on Friday, if this closes back above 32.50 because it doesn't have the volume, this area of support will hold. It's at 31.95 right now. If it gives way, it sets up the opportunity for it to travel all the way back to the 2008 lows. That is in the $25 and change range out there. That was on St. Jude. As we just kind of tool around the markets here, we take a look at the IBD 50. Leading the charge up today is Sturm Ruger. So people out there buying guns, or at least buying their stock. You've got Thoratic Corp, THOR. That was number 50 on the list. We'll go take a look at that of the IBD 50 this week. You got Stratasys Inc. up $1.27. Those folks are a good-looking stock chart, too, are in the 3D printing technology. MasterCard also to the upside. To the downside here, leading charges, you've got DaVita, DVA off $1.50, Lululemon off 88 cents, Melanex off 60, and Scripps Network and Qihoo, the search engine, one of the search engines in China, off 43 cents. Let's go take a look at this Thor. I have not looked at that equity. THOR is the ticker symbol. So they are number 50 inside the IBD 50 here, and they're trying to move it on up here. Today it's up with, yesterday was actually down with some volume, 1.9 million shares. Let's pull this stock chart back here. This thing has quite a bit of resistance work that it's trying to get through even today here. As we pull this back, just take a look at that little horizontal resistance area that it's trying to break through. The level that it's trying to break through, folks, is the price point of about 36.62. If you can get above that, 38.12, I apologize, 38.12, its most recent swing point, that is on November the 2nd out there. If you can get above that with, I would say, 858,000 shares, then it could be a serious breakout that will take you up probably into the gap down from July 28th out there at $42.14. This thing has got some work to do in order to get back up to its highs out there. Let's see. Let's finish off the show by going back and taking a look at the ES Mini. As I have mentioned here, we've had in the last 24 hours really 3 bad pieces of news that the bears, if we were truly still in that bear leg, was all the information that the bears needed to get back in shape and push the markets down. That was Uncle Ben saying, I'm running out of bullets. That was the European finance ministers and the IMF saying, I don't know, we can't come up with a deal for Greece. And then to finish it off this morning here was the University of Michigan sentiment indicators were revised lower. The bulls eating all that. I know all of you are going to be eating a bunch of turkey this weekend, whether it's leftovers or the good food. Just, folks, be out there, be safe. If you're driving, keep your eyes on the road. Focus on where it is that you're going. These markets are going higher through next Wednesday. Have a great holiday. I look forward to seeing you Monday morning. Take care, folks. Be safe, and look forward to seeing you then. Bye-bye, man.